Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, April 8th, 2013. Well, the candle we're analysing is this second last candle here on the chart. The final candle is still currently developing, and quite some development since the market's closed. Clearly a very bullish candle, but we can't fully analyse that candle at the moment until the market is closed for that time period. So the candle that we're analysing is this candle, the second last candle, and some features of this candle did suggest that there was a possibility of a change of trend to the downside. It was a white body candle, and it did continue the trend to the upside, even though we made a lower high but a higher low. So in effect, no change to the trend, which previously was up. So that's a positive sign for this market. A white body candle suggests that the buyers made some decent net bullish progress on the day between the open and the close. But there was a reduction in the size of the white body in this candle, suggesting that there was a possibility of the market changing trend due to the buyers making a less amount of net bullish progress, and suggesting that the buyers may have been losing some momentum, but we haven't seen that in today's trading, so we can discount that pretty much. We did also see the buyers failed to close with control of this market. They closed around the midpoint level, very weak amount of control that they had, trading just around that level, and it did suggest that there was a good possibility of that change of trend. So neither side really took control, but by the same token we didn't see the sellers take control of that market. So even though the buyers lost control, no confirmation of strength from the sellers, and that's why it's important that if we don't see that confirmation of strength from the sellers, we want to see confirmation of a change of trend. We certainly don't have confirmation today. Confirmation would have been a candle with a lower high and a lower low. Now importantly too, we had this shadow on the top and price rejection from the 130.25 level, a previous area of support, and then a previous level of resistance. And for the second day in a row we saw the buyers losing commitment up around that level, and that also suggested possibility for a change of trend. Also, with the market closing up around this high, it meant that this was a potential Japanese candlestick reversal pattern, a tweezers top pattern. Tweezers tops tend to be quite reliable reversal patterns. We had a decent first time frame uptrend, and what we were looking for, however, as with all candlestick reversal patterns, we require confirmation. We don't act on them until we have confirmation, and we didn't get confirmation of that. No lower high and lower low. We actually have the current candle making a higher high and a higher low, and a very bullish candle in continuation of that trend to the upside. Now in terms of the Fibonacci extension, we're examining the relationship of the current first time frame uptrend that the market's into the previous time the market was trending up. And here we saw for the previous day's trading the market trade through the 161.8% level in a moderately bullish manner. Today's trading, no follow through, but certainly no weakness, no selling coming in, only this price rejection up above that level of resistance. And today we do have a target at the 261.8% level at 130.75. So let's watch how the market that's currently developing, how it reacts to that level. If we do see selling coming in around that level, then that may suggest that there is potential for a change of trend. And in terms of the Fibonacci retracement, we're in an expansive mode of that. We've traded through the 100% in a bullish manner. Market traded up through the 161.8%, negating that. We were in no man's land for today's trading, and our next target here is the 261.8%. Lack of strength from the sellers, raising some doubt about whether there would be a correction here, possibility of the trend continuing up, and that's what we've seen today. Our target here is the 261.8% at 130.91, just above the target with the Fibonacci extension technique. Now in terms of patterns, and here we saw the market break out to the upside above the small flag pattern that we highlighted. They tend to be continuation patterns, but for this pattern we saw a breakout to the upside, a reversal pattern, not the normal type of pattern, and we have a target which is roughly up around the 130.145 level, and we've seen follow through with that, and it would have been a good trade trading the close and the bullish close up above the barriers of this pattern. In terms of Ichimoku, a bearish market in the long-term time frame, with the market trading down below the cloud. Bullish market, however, in the medium and fast-term time frames by trading above the Kijun-sen and the Tenkan-sen. That's the pink line and the green line. So we're getting some mixed signals, and this market does look like we are in a decent rally. Today the market's traded through this high here, which saw very strong downside price rejection. So at the moment we do have bullish activity above there, and it does suggest this market is destined for higher levels. Just quickly looking at the Kijun-sen, however, that started to point to flat for today's trading that's completed. It does suggest there is potential for the market to test back towards there, so let's wait and see how this current candle develops. At the moment it doesn't look like it, but if we do see a test below there, then we could see, or below some of these support areas, we could see the market test back to the Kijun-sen to find support there. And this small orange line was a small window that was opened up previously, was closed with today's trading, with the market closing up above there. The trading has extended up through there, but today we've finally seen the end of that as an area of some solid resistance to this market. And quite often when a market trades through a previous level of resistance, we do see some strong, enthusiastic, bullish activity, as we're seeing here, or bearish if it's if the market's trading to the downside. And there is a good possibility of this market testing to higher levels based on that as well. So overall, a bearish market in big picture terms, but certainly a market that's rallying and that's positive in the short-term time frame and the medium-term time frame, and it does seem as though this market will test to higher levels. We do have some Fibonacci levels. There's 130.79 level is a level that we should be looking at it as potential resistance at the moment, then up to the 131.45 level based on support and resistance.